joining me for a closer look at the day's markets action is Craig Pheiffer from Sasfin Wealth. Craig, thanks so much. Thanks so much for joining us today. So, Trump's trade policies really keeping traders awake. The U.S. president has slapped Mexico and China with tariffs worth 25%, and or rather Mexico and Canada with tariffs worth 25%, and China an additional tariff of 10%. Do you think that what's playing out in markets at the moment is perhaps over-exaggerated, considering that we did expect to see these policies come through?
Yes, we have been expecting them for some time. It's no surprise. I think we also expected the retaliation. We've seen that also coming swift and fast from Mexico and Canada. China hasn't threatened as much, but you can expect that there'll be something similar. And I think that's just put the market a bit on the back foot. It's increased uncertainty. We're not sure how this is going to play out in terms of inflation, other than we know it's going to put prices up. What that means for interest rates, what that means for growth in these economies. It's just all a lot of uncertainty. And markets don't like that. So it's a bit of a risk-off, I think, trade at the moment while we digest all of this. You've seen the dollar stronger, as you mentioned, 102 cents to the euro. That's the strongest it's been in some time. And that's just feeding off into the other currency pairs.
You mentioned that China not retaliating as fast as the other countries. Do you think it's because they're perhaps trying to take a more reserved approach, considering that it's really depending on its export market at the moment as local demand is waning?
I think China also has their growth has slowed. I think the expectation is that they'll come in below 5% this year. They managed 5%, which was their target growth, but how much of that was engineered or not, or rounded up, one can never be quite sure. But be that as it may, the economy's been slowing, and they need to see consumption pick up. Their whole mantra over the last couple of years has been to try and reduce the economy's reliance on infrastructure investment to actually boost the numbers and actually get people consuming more. And I think that's what we've also been waiting for, more on the stimulus side, more lower interest rates and the like, to get that economy going. So I think they will come out with a response, but maybe it's just being a little bit more measured and thinking about it a bit.
You touched on currency pairs, and I want to just look at the rand in greater detail. So the rand really being caught up in the sell-off we're seeing globally, as well as the sell-off we're seeing in emerging market currencies, as both Mexico and China were hit with tariffs. Craig, do you think we will see the rand getting even weaker? Or are we at a point where perhaps we won't see as much weakness coming through?
The general market expectation seems to be that over the next year or so, we could actually see the rand improve or appreciate against the dollar. But there's so much going on. It's a tough call. You need, and just trying to guess the exchange rate is really a mug's game at the best of times. One would think over the longer term it would depreciate, just given inflation differentials, growth differentials, and the like, and our current account deficit, our budget deficit, and the like. We should see a weaker currency, but there was some expectation that maybe will improve over the next year or so. But it's far from a given, and we need to see how this all plays out.
Really hard to tell. I mean, even the Reserve Bank, in some of its scenarios around Trump's trade, had said that the rand could weaken to 21 to the dollar. Scary numbers. Scary numbers.
And interest rates would be up another 0.5% under that. So they're thinking about these things. We also think about these things, but you can't act on until you really see how it plays out on the ground.
Let's get into some company news now. Vodacom out with an update, posting revenue growth fueled by key markets like South Africa as well as Egypt. Markets really liking the numbers. The last time I checked, that share price was up 3.5%. What have you made of that update, Craig?
Yeah, I think it's generally positive. again, that company has so many different fingers in so many different African pies, and each one has, sometimes they come to the party and shoot the lights out, and then we worry about other regions. This time we're getting a bit of a kicker from Egypt, which looks good. But yeah, overall, the last I looked at was up about 2.5%. Maybe it come back a bit, or maybe I looked a little earlier. But I think we need to see the actual earnings and see how they play out.
It could also just be caught up in, the sell-off we are seeing overall. Pepco also up with an update for the quarter ending December. Revenue jumped 12%, boosted by retail sales, as well as that fintech unit. That fintech business really proving to be strong.
Yes, I think it's coming off a low base.
Yeah.
So, it is growing strongly and showing some good numbers. I think overall, if you look, quarter one, the festive season, back to school, that's where they're the champions. They lead the market. They talked about, even gaining more market share. So, that element of the update wasn't surprising. But still looking at the sort of general merchandise and apparel, up about, I can't remember the number offhand, 6 or 7%. But their increase in prices was at a similar level. So in terms of volumes, the SA apparel side was rather flat. But still the market, on a day when the whole market's down, that share was also up the last time I looked. So I think the market's still appreciated. They're still making market share gains. And over the longer term, it's still looking good.
All right, let's just hit a pause on the conversation before we get to your pick. Let's reflect on some counters that have found favor with your industry peers.
I'm going to go for Alphabet because they're reporting their fourth quarter results next week. And in the third quarter, they had an exceptional performance in the cloud business. And the market is expecting higher single-digit numbers for the fourth quarter. We're also expecting adjusted earnings per share of 32.8% on the back of increased revenue of 19.3%. The capex forecast will be very important as AI expenditure is under the spotlight after DeepSeek Day, on 20 January. But the valuation of the share is not demanding at all. So I'm going to go with Alphabet.
My stock pick is a ETF. It's the Crane Shares CSI China ETF, code KWEB. And what this is it represents a basket of the biggest Chinese tech companies in a single security. So that's the likes of Alibaba, Tencent, JD, Xiaomi, that type of thing. And what you've got here, similar to Europe, is it's a sector of the market. In fact, the whole Chinese market has been very unloved for a long time. Kind of illustration of this, the entire Chinese tech sector let me put it this way, NVIDIA's market cap is 2.5 times the size of the Chinese tech sector. So the entry of DeepSeek and Alibaba also launched an AI this week. I think what this could do is possibly change investors' perception of the Chinese tech sector. It's definitely put it back on the radar, and potential disruption from these Chinese companies could put them back in focus. So I think it's a really nice way to get exposure. As we've said, US large cap tech is very expensive. Chinese tech is incredibly cheap. So it's a very nice counterbalance, and it's showing it can seriously compete in the AI race, and I think one to look at for investors.
So basically, the US tech sector up against the Chinese tech sector. Craig, what are your thoughts on that without revealing too much on your stock pick?
Well, I think tech is still a place to be. You talked about DeepSeek Day. It was a bit of a wake-up call, but I think it also highlighted that artificial intelligence it's only really hit the headlines in the last year or two. It's still got a long way to go. There's some models that some of those AI models that are still learning. Some have got to the next stage, which is more about inference. Actually being intelligent, pseudo-intelligence or artificial intelligence, whatever you want to call it. It's that there's still a growing tech sector for the semiconductors. It's not going to go away. The DeepSeek guys might have worked out a way to be make better or more efficient use of those chips. But that doesn't mean we're not going to need the chips, faster chips. We can still look to make those more efficient. So I think the whole sector didn't die last week or after DeepSeek Day. I think they've still got a long growth path for the sector. It was a standout last year. Maybe we're not going to grow at the same pace, but we're still going to see growth from that for years to come.
So you're still bullish on the tech sector. Tell me what your pick is, because I know it is from the US tech sector.
Yes, it's Meta. I think just looking at the AI space, I think they are one of the best positioned to advance in that space. Their results came out last week, also standout results. But they've got a lot of new product launches coming this year. If you look at their offering, they're seeing better monetization of their advertising, better personalized ads. Llama 4, their AI offering coming out this year. Those Ray-Ban glasses that we saw, I think they're going to continue to come out, innovate. So lots of growth I would expect over the longer term from the company. It's had a stellar first month so far. It was up about 17-18%. I don't think that should scare you off. I think it's still a good one. One of the growth stocks still in the Magnificent Seven.
So Meta one to look out for. Craig, thanks so much for your time and sharing those insights. That was Craig Pheiffer from Sasfin Wealth.